My name is Justin Barnhart, and today I will be doing a financial analysis of the Kellogg Company. The goal of this project is to further understand the stock market and be able to create a financial analysis of any company possible. With my analysis, I should be able to decide if this company, the Kellogg Company, is worth investing in. In 1898, founder W.K. Kellogg accidentally created flaked wheat berry. While many believe this was the year Kellogg Company was founded, this isn't true. Since the company officially was founded in 1906 under the name Battle Creek Toasted Cornflake Company. This company had 44 employees, and the official cornflake recipe was perfected. Now, in 1914, Kellogg Company became one of the world's leading multinational companies when they expanded into Canada. Now in 1922, continuing, they officially changed their name from the Battle Creek Toasted Cornflake Company to the name as we know today, the Kellogg Company. They sell cereal, chips, Pop-Tarts, and more. Other important events in history that Kellogg Company achieved are they supplied astronauts with food, specifically the Apollo 11. They distributed rations to U.S. soldiers overseas. And then in 2006, Kellogg celebrated their 100th anniversary and their commitment to health, quality, and nutrition. Kellogg Company is in the snack food and confectionery market and packaged goods industry. Their revenue is 100% from the packaged goods industry. Some of their products and related companies are Kellogg's, Cheez-It, Pringles, Murray, Austin, Parati, Eggo, and RX bars. Their major competitors are PepsiCo, Inc., Tyson Foods, Inc., Kraft Heinz, and Mondelez International. Within the annual report, there is a letter to shareholders that is from the CEO. The CEO has stated that there has been sustained growth in the U.S. specialty channels and in Asia Pacific. The cereal sales have finally stabilized since the downfall in 2017. They have reduced cost structure and want to pivot towards more sales growth. And now the targeted long-term sustainable growth is a shareholder return of 8 to 11% within a few years. The picture below is in the letter to shareholders to show the goal of the Kellogg Company to deliver more growth in the future. They start with winning through occasions, which means delivering the right food in the right packaging for any occasion. They are moving beyond breakfast with single-serve items and fast preparation items as well. This will drive their growth more. Kellogg's is putting their money where it's needed to ensure more growth as well. For example, they're adding resources for Pringles in Brazil because its growth in South America is outstripping its supply. They also want to capitalize on white space opportunities where they are launching wholesome snacks in Asia and Africa. They want to improve their marketing actionable insights where they allowed Pringle consumers to stack different colored crispy foods to create a different taste and experience. Also, they want to deliver perfect service to the customer by creating a better atmosphere. For example, they moved out of the direct store delivery, so it makes it simpler and more efficient to get their products to consumers. They're also testing new store racks and are creating cross-category promotions for the first time ever in the United States. This chart and execution of it will lead to the growth of the Kellogg Company for the next few years. Below are the analyst statements about the Kellogg Company. The consensus rating for the Kellogg Company is a 3.19 estimate for their price-to-earning ratio. Analysts are saying 23.8% say that you should buy the stock, 61.9% say you should hold the stock, and 14.3% say you should sell the stock. Now, in total, by average, most of the analysts are saying you should hold the stock or buy the stock, which is good for buyers who want to get into the market. Now, two of the top analysts are Erin Lash from the Morningstar Company, where she says you should buy the stock, and she's actually targeting it at $78 a share. Well, right now, it's between $57 to $58. And Brittany Weissman from Edward Jones is saying you should hold the stock. Now, these are two top analysts who are recommending that you should either buy or hold a stock, which shows that the stock has a bright future ahead of it. A A few current events that are happening with the Kellogg Company as of right now are the Kellogg Company CEO says the stock right now is cheap and a bargain. Now he says this even though the stocks has declined and sales also have declined in 2017, but in 2018 the revenue has stabilized. His quote was, "Turning around a stubborn, declining net sales trend with mature brands is one of the most difficult things to accomplish." Another current event is Hostess Brands Nutella owner Ferraro are competing to buy Kellogg's Keebler and Famous Amos cookies. Now, to the Kellogg Company, it's not a big moneymaker anymore, but to these other companies, it is. Sales growth has stalled throughout the whole industry. Going off of the current events, on April 1st, 2019, Kellogg's has sold and agreed to an agreement with the Ferraro Group to sell their Keebler cookies. Now, they sold it for $1.3 billion. And the statement from the CEO of Kellogg is, "This divestiture is yet another action we have taken to reshape and focus our portfolio, which will lead to reduced complexity, more targeted investment, and better growth." Divesting these great brands wasn't an easy decision, but we are pleased that they are transitioning to an outstanding company with a portfolio in which they will receive the focus and resources to grow. Now, Steve Callahan is saying that he wants to reshape the company into only certain things such as cereal, protein bars, etc., and get rid of some things that he doesn't believe will make as much money anymore. Below is the current stock price for the Kellogg Company. Right now, the price is at $57.57, which is very low to what they were at almost 3 years ago, which was $86.98 in July 2016. This is a 5-year chart, and from 2014 to 2015, the stock was very stagnant and around $65 a share, and it went up with growth in 2016, but since then has been going down slowly with some spikes here and there. And in 2019, Kellogg Company hit its low of $53.61 on March 3rd, 2019, and since then they have increased their stock price $4, and it doesn't plan on stopping there. Below is the comparison chart of the Kellogg Company's competitors: Pepsi Company, Mondelez International, Tyson Foods, and Kraft Heinz. Most of the companies shown are gradually increasing every year now, and since some of the share prices are higher, such as Pepsi, which has a share price of $120, while the others range from $30 to $70. Kraft Heinz, colored orange, has taken a hit since 2016, where they have gone from $120 all the way down to $33 a share. Tyson Foods, colored red, took a dip in 2018 and is recovering and going up slowly. Mondelez International, colored pink, has kept stagnant while going up gradually for years and now is at an all-time high of $50.20. This chart shows how competitive the packaged goods industry really is. Here are some inside trades that have occurred, and these are the last 5 transactions from the Kellogg Company's top management. As you can see, Kellogg WK Foundation Trust Company has sold 100,000 shares 3 times, almost every 2 weeks. This is most likely nothing to worry about since they are beneficial owners and own almost 64 million shares. Next, Gary Pilnick acquired shares through the company and not through the market. These insider trades show that top management aren't really selling their stock, which means the company could be set for a breakout. The top management for Kellogg Company is as follows. To the far left is Stephen Callahan. He is the chairman of the board and the CEO. Middle left is Chris Hood. He is the president of the North America operations. To the middle right is Gary H. Pilnick. He's the vice chairman and the chief legal officer. And then all the way to the right is Monica McGurk, who is the chief growth officer for the whole company. This chart displays all of the key statistics of Kellogg's and its competitors. Most of these companies are below the average price to earnings ratio of 15.8. Pepsi has the highest ratio of 22.12, while Kellogg is in the middle of its competitors at 13.02. All of the companies have dividend yields, and the highest is Kraft Heinz at 4.84%, and Kellogg's is right behind it at 3.89%. Continuing, the bond ratings that you see on the screen are from Moody's, and Kraft Heinz has the lowest rating of a Baa3, while Kellogg's is right behind it with Tyson Foods at a Baa2 rating, but Pepsi has the highest rating at an A1. The average beta is 1.0, and that means that if you're above a 1 rating, it usually means your stock is more risky than the average market. As you can see, all of the competitors are below a 1 rating, which shows that aren't as risky as the market average. But Kraft Heinz is very close to it at a 0.95, and Kellogg's company is the lowest risk of its competitors at 0.64. PepsiCo has the highest return of investment at 69.8%, while Kraft Heinz is at a low of 6.89%. Continuing, PepsiCo also has the highest earnings per share at 5.51, while Kellogg sits in the middle of its competitors again at 3.93. These are the key numbers for Kellogg and its competitors. Kellogg has acquired many companies in their time within the 100 years. They just recently acquired RX Bar in October 6, 2007. They acquired Pringles in May 31st, 2012. Keebler Foods, October 27, 2000, which they now do not own since they just sold it to the Ferraro Group. Kashi, June 30th, 2000, and the Parati Group in October 13th, 2016. There are many global issues that the Kellogg Company faces, such as climate change and food security. Now, within this, it's the viability of ingredients and the ingredients being able to live, grow, and develop as a seed under the certain conditions that Kellogg's Company sets. Also, they're relying on their natural capital, including energy for distribution and the creation of their products. Now, transportation costs have also been increasing due to the high level of long-haul driver turnover and the railroad traffic. The foreign exchange market is also a risk for the Kellogg Company since they're exposed to fluctuations in foreign currency due to third-party purchases. Risks that also come are against competitors in society. They're in a highly competitive food industry, and the changing retail environment and the growing presence of alternative retail channels could negatively impact their sales and profits. Simply, yes, I would invest. With the standards, yes, I would invest since the company seems to be turning itself around and the future projections look promising. Their EPS is getting better every year, and they're trying to hone in on a certain category and not all products. They want to refocus their whole portfolio. They are taking the proper measures to make sure that they grow in the next few years. Their beta is also low, and they are a low-risk stock, and many analysts say that you should either buy or hold. Their stock is at one of its lower points, and it seems to be on the rise. Lastly, once again, in my opinion, as of today, Kellogg Company is a buy.